I strongly believe the European Union must play a stronger and more visible role addressing the challenges of our time globally. We need to ensure that the European projects can be successful, and we need to strengthen visibility of the European Union in the world. Europe is striving for strategic autonomy, and in this context, the debate about the future structure of EU financing in development takes place. The Wise Persons Group report is a key contribution to the discussion about how to organize European development financing. It needs to be more efficient, and therefore we need to reduce fragmentation and move forward towards a fully joined up and coherent EU approach. I agree with the assessment of the report. The EU needs to streamline and consolidate its development financial architecture. This is the reason why we in EIB are working for some time now on the considerations for a subsidiary, which does not only invite the European Commission, but also the development agencies and national promotional banks to act as shareholders of that subsidiary. We have put this on hold because we wanted to wait for the visa report and out of respect for the work that is being done there. I also agree that the EU needs its own dedicated development bank. Note, I'm saying EU because we are talking here about the implementation of EU policy while the EU is striving for strategic autonomy. And in Africa, it can be better seen than anywhere else how important that idea of strategic autonomy of the European Union is. As the EU bank, fully owned by the member states of the European Union, we implement EU policy only. The report mentions 3 options for how to get there. It argues that all of the 3 options would entail important organizational changes and require significant financial resources. Yes, if you want to address all the gaps that have been very well identified by the report, we will need to put additional resources behind our ambition. But of the 3 options presented, politically and financially, by far the most feasible option is clearly option 3, having the development subsidiary at the EIB. To create a development subsidiary at EIB, we do not need significant additional resources, nor do we need years. Our proposal for a European Bank for Sustainable Development as a structure within EIB can help to quickly address the most pressing gaps and improve the EU development finance architecture. The European Bank for Sustainable Development builds on EIB's already existing development competence acquired over the past 50 years. It builds on our increasing arsenal of banking instruments and technical expertise to support private sector development in fragile economies. The EIB has a mandate to operate in 52 out of the 59 United Nations listed less developed countries or fragile states. The EIB has an active exposure in 42 of them. We do not shy away from the challenge. Since 2008, we have mobilized over 100 billion euros of investment on the African continent alone, and over 50% of this is with the private sector. But yes, we acknowledge the need for change to strengthen our operations outside the Union. We need to further develop new products, policies and risk guidelines for development, gradually increase our local presence outside the EU, and further strengthen our development DNA. We need to strengthen the development focus and culture within EIB. And we need stronger involvement of the European Commission, the European External Action Service, member states and their bilateral institutions and development agencies in the governance of operations outside the EU if we are to improve the EU development finance architecture. I might mention that wherever we are represented outside the European Union, we are part of the EU delegations. In doing so, we need to bring EU development policy even closer to the EU bank. The proposal for the European Bank for Sustainable Development entails just that. We can thus significantly strengthen Europe's development finance architecture without creating a new institution and without turning a regional multilateral development bank into an EU body that does universal development banking. We can build on EIB's strong track record of financing and advising on projects in more than 140 countries. We can ensure full EU control and full strategic autonomy without undue influence by non-EU players. And we can set up this immediately. It can be capitalized by the existing EIB own resources for external activity, complemented by the existing funding of the ACP investment facility and the foreseen dedicated resources to the EIB from the next MFF. That's not a quick fix. It can be set up easily, but long-term, and that's the most important point, it's the better solution. If and when member states who desire, the European Bank for Sustainable Development can be further capitalized to achieve an even higher development impact to further mitigate gaps in an efficient and effective way. By the way, I believe that in the next years and decades we need to think development big, because in view of the challenges in Africa, with 4 billion people living there by the end of the century, we have to approach development on a larger scale than so far. In addition, the European Commission, EES, and European bilaterals and development agencies could become shareholders. I'm convinced that this gradual, modular approach for EBSD, the European Bank for Sustainable Development, is the right one. Ladies and gentlemen, the EU Bank has proven in the past that we are able to change to deliver results. The Juncker Plan and EFSI are the most important and prominent examples. With the EBSD proposal, we are now ready to deliver again. Thank you very much.